Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, Chase, today we have something that's extremely important to people. Talking about the Starbucks Stars Reward. A lot of people drink Starbucks and so forth, and they've kind of devalued their star program. Used to be 12 stars will get you one free item. Well, they've changed it to now 125 stars get you one item. Now, they have included other items you can buy, like the New York Times, Spotify, but what if you don't use those? You're spending a lot more to get the same thing.
Yeah, I mean, they have 11 million active users, so I'm sure, I'd say at least half of them are probably not happy about this, that are, avid Starbucks drinkers. Like, I don't use Spotify, I don't use the New York Times, I just like the coffee.
Right.
So, I mean, kind of looking at the numbers here, because we always like to look at numbers. As you can see, before, if a coffee costs $1.85, you would buy 12 coffees. That would cost you $22.20 to get a free item from Starbucks. Well, now, the best you can do, the least amount of money you can spend to get a free item, $62.50. That's kind of frustrating.
This reminds me, just recently we did about how the wealth become more wealthy because they understand numbers. Here's a very good example of another thing, understanding numbers. So unfortunately, not much you can do about it because it's the Starbucks program. All right, let's look at the company today. It's United States Steel, symbol X. You can see the current price on $14.75, the high $26.95, and the low $6.15. Right now, again, around $14.75. And you can see how volatile this stock is. Let's take a look at some numbers, see if it's worth a buy here or not. Unfortunately, sales down 34.8%. Earnings fell by 2,631%. Balance sheet not looking too good here. Current ratio 1.68. That's okay. But debt to equity 160.7. That worries me a little bit.
Yeah, looking forward, the company's not looking great on the surface. As you can see, estimated earnings per share going out to December 2017, negative 31 cents. But again, we always talk about understand the numbers. This comes about any part of the business. You have to understand the business, understand the numbers behind it. And the range on those estimates, as you can see, negative $2.63 is the low, the high, $2.18. That is a huge discrepancy, which of course affects the average estimate. So you really have to understand this company. And first of all, I wouldn't really go near this company right now because of the debt. But again, always understand the numbers for the companies you're invested in.
Right, and that's so true. And again, there may be some potential down the road because maybe the price of steel is going down, make it worth more for people because maybe the price of lumber goes up. And I remember during the housing boom, they're talking about, well, lumber's so expensive, they start building some houses with steel. So maybe it's there, but again, I do kind of worry about the debt as well. So, all right, so let me ask you, are you concerned with the current return on your investments? Maybe you're not happy with it. Maybe you're just not happy with your current advisor because he doesn't look at these numbers, doesn't understand numbers. Well, maybe that means it's time for you to give us a call here. We've been managing money successfully here at Wilsey Asset Management for over 30 years.
You want to call and have a conversation with us? Phone number here, 858-546-4306, or you can contact us at our website, smartinvesting2000.com.